Ever wondered how you can start investing with just a few dollars? Well, you're not alone. The world of investing can sometimes seem like an exclusive club reserved for those with stacks of cash. But the truth is, it's not. Investing is for everyone, and thanks to advancements in technology, it's now more accessible than ever. Let's start with the basics. Investing is essentially putting your money to work for you. Instead of letting your hard-earned cash sit idle in a bank account, you're placing it in ventures, stocks, bonds, or other forms of investments that have the potential to grow. It's like planting a seed, nurturing it, and watching it grow into a tree. Now, why is investing important? Well, think about this. The cost of living isn't getting any cheaper. Everything from a cup of coffee to a college education is getting more expensive each year. That's called inflation. And while saving is a good habit, the money you save today might not have the same purchasing power in the future due to inflation. But when you invest, you're not just preserving your money's value, you're actually increasing it. But here's the thing. You don't need to be a Wall Street tycoon to start investing. You don't need a fortune. In fact, you can start with just a few dollars. And you're probably thinking, how is that even possible? Well, in recent years, new platforms and technologies have emerged that make investing accessible to everyone. Enter the world of robo-advisors and micro-investing, where you can start investing with as little as the price of a fancy cup of coffee. This might sound unbelievable, but let me share a story that will show you how it's possible. And remember, every great journey starts with a single step. In the case of investing, that step might be smaller than you think. Meet Sam, a teenager who started investing using robo-advisors and micro-investing platforms. Sam was not born with a silver spoon, nor was he a mathematical whiz kid. He was just an ordinary teenager with a part-time job and a knack for saving money. Instead of spending his earnings on the latest gadgets or trendy clothes, he decided to put his money to work. His journey began with a simple Google search: how to invest money. He came across a plethora of information, but two terms caught his attention: robo-advisors and micro-investing platforms. Intrigued, he dived deeper into these concepts. Sam started with a modest amount, just $25. He chose a robo-advisor platform that suited his needs. The platform's algorithm helped him allocate his money into different investment options, based on his financial goals and risk tolerance. He did not stop there. He continued to invest a small portion of his earnings every month, embracing the habit of consistent investing. As Sam's income from his part-time job increased, so did his investments. Over time, Sam's portfolio grew. It was not just due to his consistent investments, but also the returns he got from them. The $25 he initially invested were not just sitting there, they were growing, thanks to the power of compound interest. Sam's investment journey was not always smooth. There were times when his portfolio's value dropped due to market fluctuations. But Sam was not fazed. He knew that investing was a long-term game. He stayed the course, continued to invest consistently, and his patience paid off. Now, Sam is not a millionaire, but his investment portfolio is worth more than he ever imagined when he first started. And he is still a teenager. He has a long way to go, and his investments have an even longer way to grow. Now you might be thinking, how could Sam make money from investing just a few dollars? The secret lies in compound interest. Compound interest, ever heard of it? It's a term that might sound complex, but in reality, it's quite simple and incredibly powerful. Let's break it down. Imagine you're saving money in a jar. Each day you put $1 in. Over time, that jar starts to fill up, right? Now, what if I told you that for every dollar you put in, you could earn a few cents more? That's essentially the concept of compound interest, earning interest on your interest. So let's look at our friend Sam, who we introduced earlier. Sam started investing when he was 18. He puts in $100 every month into an investment account that earns an average of 7% interest annually. With simple interest, by the time he's 65, he'd have saved $56,400. Not bad, right? But here's where the magic happens. With compound interest, Sam isn't just earning interest on his initial $100 each month. He's also earning interest on the interest that's been added to his account. So, by the time he's 65, he doesn't just have $56,400. Instead, he has over $260,000. That's more than 4 times what he put in. You see, compound interest is like a snowball rolling down a hill. At first, it starts small, but as it rolls down the hill, it picks up more and more snow. The snowball, or in our case, the money, grows exponentially. The key to compound interest is time. The longer your money is invested, the more time it has to grow. And the more it grows, the more interest it earns. It's a cycle that continues expanding your wealth. Compound interest is the secret ingredient that makes your money work for you, even when you're sleeping. It's like having a money-making machine that never turns off. And the best part? All you need to do is start investing and let time do its thing. But how did Sam decide where to invest his money? That's where robo-advisors come into the picture. So what exactly is a robo-advisor? Well, it's like a financial advisor, but digital. It's a computer algorithm that manages your investments for you. You simply input your financial goals and risk tolerance, and voila! The robo-advisor takes care of the rest. You might be wondering, how does a robo-advisor know where to put your money? Great question. These digital gurus use modern portfolio theory to distribute your investment across various asset classes. This could include stocks, bonds, real estate, and commodities. By diversifying your investments, robo-advisors aim to maximize your returns while minimizing risk. Now let's talk about the benefits of using a robo-advisor, especially for beginner investors like Sam. First off, robo-advisors are incredibly user-friendly. They come with easy-to-use interfaces and provide a straightforward way to start investing. You don't need to be a Wall Street whiz to use them. Secondly, robo-advisors are cost-effective. Traditional financial advisors often charge hefty fees, but robo-advisors, they're much more affordable, with some charging as low as a fraction of a percent of your invested assets. This means you get to keep more of your hard-earned money in your pocket. Lastly, robo-advisors are impartial. They don't have emotions or biases. They simply follow the data. This means they won't panic and sell when the market dips or get overly excited and buy when the market is peaking. They maintain a steady, calculated approach to investing, which can lead to more consistent returns over time. Despite all these benefits, it's important to remember that robo-advisors, like all investment strategies, come with risks. The market can be unpredictable, and even the most sophisticated algorithms can't guarantee profits. But by taking a calculated risk and investing wisely, you can set yourself up for financial success. Robo-advisors take the guesswork out of investing, making it accessible to everyone, including you. Now, you're probably wondering how to get started. Let me introduce you to micro-investing platforms. Micro-investing platforms are essentially your gateway to the world of investing. Picture this. You're standing on one side of a river, gazing at the lush greenery on the other side, but you're not quite sure how to get across. That's where micro-investing platforms come in. They're like a bridge that helps you cross this river, allowing you to step into the realm of investing, even if you're starting with just a few dollars. But what exactly are these platforms? Well, they're digital platforms that let you invest small amounts of money, often just spare change, into a variety of investment options. It's like dipping your toes into the pool of investing without having to dive in headfirst. Here's how it works. Instead of having to shell out hundreds or thousands of dollars to buy stocks or bonds, you can start investing with as little as the price of a cup of coffee. Some platforms even allow you to invest your spare change. Imagine buying a sandwich for $4.50 and having the remaining 50 cents automatically invested for you. That's micro-investing in action. And while 50 cents might not seem like much, remember the power of compound interest we talked about earlier? Over time, these small amounts can grow into a substantial sum. It's like planting a tiny seed and watching it grow into a towering tree. Another great thing about micro-investing platforms is that they're generally user-friendly and designed for beginners. They often offer educational resources to help you understand investing better, and some even feature robo-advisors that can guide you in making investment decisions based on your goals and risk tolerance. So, whether you're a high school student saving up your lunch money, a college student with a part-time job, or a young professional starting your career, micro-investing platforms can be your stepping stone into the world of investing. Micro-investing platforms are the perfect starting point for your investment journey, just like they were for Sam. So, you're ready to start your investing journey, but where do you begin? Well, investing can seem like a massive puzzle at first, but don't worry, we're here to help you put the pieces together. The first step is to understand your financial goals. Are you saving for a new car, college tuition, or maybe even a trip around the world? Knowing what you're working towards can help guide your investment decisions. Once your goals are clear, you'll need to decide how much money you're willing to invest. Remember, it's not about having a lot of money to start with. You can begin with as little as you're comfortable with, thanks to micro-investing platforms. These platforms allow you to invest in fractions of shares, making investing accessible no matter your budget. Now let's talk about robo-advisors. These are digital platforms that provide automated, algorithm-driven financial planning services with little to no human supervision. A typical robo-advisor collects information from you about your financial situation and future goals through an online survey, and then uses this data to offer advice and automatically invest your assets. Choosing the right robo-advisor or micro-investing platform is key. Look for one that aligns with your financial goals and risk tolerance. Some have a focus on aggressive growth, while others prioritize steady long-term gains. Once you've chosen a platform, it's time to set up your account. This usually involves providing some personal information and answering questions about your financial goals. Don't worry, these platforms use secure systems to protect your information. After you've set up your account, you can start investing. You'll be able to choose from various investment options, such as stocks, bonds, or exchange-traded funds. Remember, diversification is key. It's like not putting all your eggs in one basket. Finally, keep a close eye on your investments and make adjustments as needed. Don't be discouraged if you see fluctuations in your investment value. That's just part of the journey. Remember, the first step is always the hardest, but once you start, the journey becomes much easier. So take that first step today and watch your money grow. Consistency is key in investing, just like it was for Sam. Sam started his investment journey with just a small amount, but he was consistent. He put in a little bit every month, never missing a beat. It didn't matter if the market was up or down, Sam was there, making his monthly investment. Now, why is consistency so important? Well, let's think about it. When you invest, you're essentially planting seeds. And just like a garden, your investment needs regular care and attention to grow. You wouldn't plant a seed and then just walk away, would you? No, you'd water it, nurture it, and watch it grow. The same principle applies to investing. Your investment, no matter how small, is your seed. And your regular contributions, those are your water and sunlight. And just as a gardener doesn't expect a seed to sprout overnight, you shouldn't expect immediate returns on your investment. It takes time, but the magic happens when you're consistent, when you keep adding to your investment month after month, year after year. That's when you start to see the power of compound interest in action. Compound interest, as we've discussed, is the process where your interest earns interest, and the more time you give it, the more it works in your favor. But for compound interest to work its magic, you need to be consistent. You need to keep adding to your investment pot. Remember, it's not about how much you invest, it's about how regularly you do it. Whether it's $10 or $100 a month, what matters is that you're consistent. Because when you're consistent, you're not just investing money, you're investing time. And time, when it comes to investing, is your most valuable asset. So, be like Sam. Start investing, no matter how small the amount. Be consistent, be patient, and watch your investment grow. Because the magic of investing isn't in the big one-time investments. It's in the small, consistent ones that, over time, add up to something substantial. Just like Sam, you too can build a substantial portfolio over time, with consistency and patience. Investing might seem daunting at first, but with the right tools and understanding, anyone can do it. We've embarked on a journey today, exploring the fascinating world of investing, tailored for a new generation. We've seen the power of compound interest, the wonder of money making more money. It's like magic, but real. We've ventured into the realm of robo-advisors, these tireless financial companions that help guide us on our investment path. And we've discovered micro-investing platforms, gateways that make investing accessible to everyone, even if you only have a handful of spare change. We've discussed the importance of getting started, of taking that first step. And through it all, we've seen the magic of consistency, of sticking to the plan, of letting time and interest do their work. Remember, everyone has to start somewhere. And with robo-advisors and micro-investing platforms, you can start investing with just a few dollars. So, are you ready to make your money work for you?